Business income can be a massive part of your property loss. A lot of people don't realize this or consider it prior to the claim, but business income continues to pay your business or your multifamily property at time of loss. So just this week, we're going to walk through an example of where we went from an offer of $33,000 a month to $400,000 a month because we performed our own analysis. So stay tuned. We're going to talk a little bit about business income. And for those that are new to the channel, new to our work, my name is Douglas Francisco with Spartan Risk Management. Been in the insurance business, knocking on 20 years now. We specialize in a couple main segments. We are consultants. We are not brokers. We are truly consultants. We specialize in multifamily, commercial real estate, aviation, high net worth, and lending. Today, we're going to share an example of actually something we had happen this week. I like to share some live examples through case studies or kind of some of what we're working on. And one thing that we do for all of our multifamily clients on our large claims is a business income analysis, right? So what's going to happen is on a property claim, you're going to have the building loss, and the other part of that's going to be the business income loss, or on the multifamily side, also called loss of rents. So there's a lot that goes into that. The insurance companies hire their own forensic accountants to go through all the data and provide a loss measurement. And we actually do the same. So what we do ahead of time is we gather that information. We provide business income accounting review services. We do our own analysis, and then we send that to the forensic accountant. So it's a huge value add for our clients. We know what we're going to have up front. And the biggest thing is we can also identify any potential issues before they happen. So that's kind of what we did this week. And I want to talk through this. I think this could be a value add to some of you. So business income. What is business income? It just means a loss of business revenue. On the multifamily side, you have a building that burns down. You have a 24-unit building, for example. That building, there's a fire loss, and you have to vacate those 24 units. It will pay for the rental loss revenue of those 24 units. Obviously, there's some caveats to that, and those are the things we work through as far as transfers. We look at net loss, but that's not the intent of this video. We're going to try and stay higher level. So business income, you can have, there's a valuation component to it. Just like you would value a building, you could say a building is valued at $5 million, and that's the most that you would ever get out of insurance, hypothetically speaking. We have the same for a business income loss. There has to be a value component to it. Typically, it's not actual loss sustained. At many times on old policies, that could be the case. You don't see that too much anymore, but sometimes, depending on the type of program, you could have something called ALS or actual loss sustained. But what we're going to talk about is what we see most common. It's going to be a dollar amount, right? A fixed dollar amount, or a time component, or it could be a combination of either. So this week is a great example. We had a multifamily client, and most multifamily policies give 18 to 24 months of business income, right? And there is a valuation component that goes into that for rating and premium purposes, but most multifamily policies are time. And what do I mean by time? I mean months. You're usually going to be at 18 to 24 months, right? Now, what we had on this was a little different. This was a stated amount, and it was actually, I'm not going to get into the calculation, but it was a stated amount on a pro rata basis based on the entire schedule down to that community, down to that building. So we actually had to calculate that. Now, the interesting part is the amount ended up coming out to be just under 12 months, right? Which is going to put us tight on this loss. It really will. We were not part of setting up the business income or the valuations on the front end. You know, we're helping on the claim side, and this is going to be a discussion for renewal of next year for sure. But what they had was they had an amount, and the amount total ended up being just under 12 months. Versus a time component of 18 or 24 months. So, in recap, business income, usually you can have either a stated amount or a time, which could have an amount component to it of 18 to 24 months. It's common what we see. And if you have an agency lender, Fannie Mae, Freddie Mac, on as part of the lending, you're gonna typically see 18 to 24 months required. So we identified that we had 12 months of business income, and that is actually going to put us very tight. We have an immense sense of urgency to get this claim rolling, right? We have our cause and origin fire investigation. That's been delayed. Had some discussions yesterday. We're going to have to pick that up. So we already talked with the contractor that's running it. They have a great team, but we already know 12 months is going to be tight, so we're going to continue pushing. So the next thing I want to talk about, and this became a big issue this month, and we saved our client a lot of headache, is monthly limit of indemnity. On most business income losses, you're going to have something called a monthly limit of indemnity. What does this mean? It means there's going to be a monthly limit that you will be indemnified for your loss. So that's typically done in a fraction, right? So commonly on multifamily, we'll see 1/12. What does 1/12 mean? 1/12 means the total amount that you may have. So I'm going to use round numbers just to make this easy. If we had 1.2 million of business income loss at a 1/12 monthly limit, that means the most you would ever get in 1 month is $100,000, right? So typically for a multifamily client, this is okay. And what do I mean it's okay? We need to make sure that there's proper limits here. But if you're just looking on it, let's just say an annual basis, right? If you had 1.2 million of business income for this, let's just say one particular building, it had a 1/12 monthly limit, you would be paid at maximum $100,000 a month. Now the reason this is okay is your budgeting and your revenues on monthly cycles, right? Multifamily industry is on monthly cycles. Now, where this can be, and I'm gonna continue on this for a second. On this example, we had a 1/3 monthly limit, right? So instead of it being 1/12, it'd be 1/3. So we would actually get 1/3 of the 1.2 million, which is 400,000. So we could actually get up to 400,000 at a 1/3 monthly limit. Now this is why it's important. A lot of people don't understand the lower this number is, the more you get. Now you have to incur the loss, right? If you don't have $400,000, you're not gonna, of a loss, you're not gonna get it. But where this is important is in retail. So if your example, maybe retail is the biggest one, right? If you have a retail, or you could be a hotel, right? If you have any type of exposure occupancy that's heavily based on a seasonal component, that's where this 1/12 monthly limit would absolutely hurt you. So one of the things that we do on the front end for all of our clients is we look at the revenue source for, if it happens to be a hotel client, or potentially a retail client. Most of ours are all real estate focused. So if it's a hotel client, we want to look at your annual revenues and we want to see down to a monthly basis and really see where your revenue numbers are, because we always want to make sure that at the time of loss, you have enough business income. If you're a Florida, based hotel client and you happen to be in Central Florida and your summer's the busiest months, when the kids are out of school, we have a lot of international travel in Central Florida. Those are going to be the big months. Those are going to be the big hits. We want to make sure that you have enough for the months that you have lost. So again, very, very briefly, a 1/12 monthly limit of indemnity would work very well for a multifamily client because you're receiving your revenue on a monthly basis. If you are not a multifamily or typically receiving revenue on a monthly basis, we really need to look at the other monthly limit of indemnity options. So these are just some of the things we do for our clients. Business income is such a big part. And one other thing I want to talk about, there was a misinterpretation of the policy with the entire adjusting team. So in the example we had this week, they were trying to give my client, they were trying to divide the 1.2 by 100. This is wrong. This is wrong, by the way. And they were only going to give them 1/3 of that. So they were trying to reduce it down to 33,000, which was completely wrong, where they should have actually had up to 400,000. So that's just an example this week. We're able to have some good discussion, have some open dialogue with the adjusting team, explain our basis and really how the policy works, because hey, mistakes happen. Every claim is different, and even the large claims, the large losses, we have to, a lot of times we'll go through an education process. So this is what we do, business income analysis. It's a big part of what we do for our clients. My name is Douglas Francisco. I've got 20 years in the insurance business. Love to help you out. The first step really to working with us is to book a consultation on the website. Book a 1-hour consult. We'll see if we can help you out. I promise you'll get something good out of it. I love those consultations. Talk a little bit about insurance, your business, and really see if we can help you.